What's up, YouTube? Welcome back to another video. In this video, we're going to be talking about how to spot fake supply and demand. All right, so as I get into it, you understand what I mean by that. But before I start this video, if you guys want to join the Discord, link in the description. If you guys want to follow my Instagram, the link is also in the description. It's ZSNIPES_trading. All right, you guys know already the Discord. This right here is my Discord server. All right. One thing about the Discord server, right? It's a community. It's a course, it's a mentorship, it's everything in one, right? You have the community channel right here. You know, you can have a whole bunch of other traders that you can talk to. I usually go in there and I talk to them, but they're usually talking amongst themselves, talking about what trades they see and things like that, right? A whole bunch of cool guys, right? If they have questions, they ask and stuff like that. And then you have the mentorship part right here where you can go into the videos that are pre-recorded. And then we have voice section. We have a whole bunch of stuff. All right. So, I mean, if you're interested in that, I mean, links in the description. Okay. So one of the questions that comes up from my students are, how do you know when a distribution is going to be a reaccumulation, or it's a fake distribution, or it's a fake accumulation? Well, let me go ahead and give you an example, right? You'll have cases where reaccumulation will look like this, right? It'll come out as a distribution, and then it'll turn into a reaccumulation. Okay, as we know, our distribution starts from our 3-job move. We have 1, 2, 3 jobs to the upside, and then we have a break instruction. So this is a valid distribution, but it turns into a reaccumulation. So usually, if you were trading this as distribution, you would take a sell from whatever order block or sponsor candle that you spotted right here. So this would be a loss. Okay. Now, if I could tell you, there are some ways to avoid that. That's the point that I'm trying to get here: how to spot fake distribution, which is supply; how to spot fake accumulation, which is demand. Right. So we'll talk about distribution right now since we have it up. All right. One thing that you could see, right? One thing that that you could spot itself from the distribution itself is signs of weakness. Okay, that's one thing that we always look for, is signs of weakness. Okay, so for instance, let's say the market is going up. Okay, then you have something like this. Okay, this looks like it's gonna be a clear distribution. All right, but there's one thing that we see here: lows are maintaining. All right, there is no previous, right, before this quote-unquote UTED happened, there is no previous signs of weakness. All right, you'll see distribution like this, and then here is, you know, the most prime time, the most clarified distribution that we want to see. You'll see distribution go sideways. All right, that's one thing that is one of like the main things that you could look for, is how is the distribution looking? Are we still maintaining that bullish price action, or are we going sideways? This is how you can determine whether this distribution is, you know, more valid than would be this distribution, and avoid the reaccumulation or the stop loss. All right. For those of you who don't understand this right now, this is a little bit more advanced. I wouldn't say really more advanced. If you know a little bit about Wyckoff, then you should be able to understand this. All right, because I'm pretty sure 90% of people who trade Wyckoff have encountered this and trying to avoid this, and just trying to avoid this simple loss. And they're trying to avoid that extra loss, and, you know, whatever the case may be. But let me go ahead and explain this, right? So you'll have this type of distribution, and then you'll have this type of distribution. Okay. Now you see these are two types of distributions. All right. You have one distribution where we're going more sideways, and then you have another distribution where we're kind of holding this bullish price action. Now, I'm not saying this isn't valid. This happens, right? This can be valid, but this here is more valid than this is, because you have the potential that we could just reaccumulate. All right. Now, don't get me wrong. This as well, right here, could just turn into a reaccumulation and go up, right? And go up like this. That could happen. Okay. So you're probably thinking like, okay, what's the point then? Well, this is where structure comes into play. What is the structure, and who is in control of the market? So what I mean by who is in control, who is in the market currently? Are buyers in the market, or are sellers in the market? Why is the Wyckoff occurring? Okay. Why are we accumulating? Why are we distributing in a certain area? That's one thing that is key to understand when it comes to Wyckoff. This is how you avoid losses with Wyckoff. And this is why mainly I always focus on taking Wyckoff in certain areas. All right. And this is why I always wait for my point of interest, for a demand zone, for a supply zone before I even look for Wyckoff. You understand what I'm saying? Or another way that you could do this is if the market is going up, right? Let's say you have bullish price action. Market is going towards the upside, right? And let's say oh, I deleted that. So let's say you have bullish price action, right? The market is going towards the upside. As the market is going up right here, let's say you see a distribution forming out of nowhere. There is no type of, let's say there's no type of supply here. This is just a regular high. The market has been bullish. The structure is bullish and we're continually making highs, right? Are you going to trust this distribution? Why is this distribution happen if there's no supply here, right? Now you can expect that this is going to happen like this. You see what I'm saying? So this is like one, case that you can kind of take from this. Understand who's in control of the market. Once you understand who's in control of the market, you can avoid this fake distribution. All right. Remember, a failed distribution is a reaccumulation. So even if you would have taken this distribution and you would have failed, right? Let's say you would have failed this trade and you took a loss on this. Now you know for 100% fact, once the market goes down here, you want to be a buyer from here because buyers to control this area would be something like this. You'll see the market give you an accumulation that looks like this, right? So let me do something like this, and then boom, the market will continue down, right? This is a redistribution. So at first it came out like an accumulation, but then all this is a rated liquidity, and the market continued down. And then you'll see the market come back up, test this whatever zone, and it continue down. This is a redistribution. So essentially, this is an accumulation turning into a redistribution. How do you spot this? It's the same thing as the distribution, right? You want to see who's in control of the market, right? And you want to see is before this UTAD or this not UTAD, I'm sorry, before this spring happens right here, were we able to invalidate the highs? Look at this accumulation right here. Let me delete some things for you guys. Look at this accumulation right here, and then let me draw you a perfect quote unquote. There's no really perfect accumulation, but let me draw you the pattern that you want to see. So you see the difference between this? This is more of a range than this is. So when you're looking for accumulation, you're looking for distribution, when you're looking at these supply and demand zones, you want to see a range form, right? Right here, you see that this low was made, but there wasn't another low here. Another low was not formed here, and we showed some signs of bullishness because we were able to take out the high. Now, after the market goes down and we do this, then we get this next drive. This is our STMB right here, and this will be our spring, right? In this case over here, you see this can just be seen as low, high, low, high. There's no really signs of bullishness here until we have this spring occur, and then we have this, right? So in this case, what you could do, instead of just going and committing on this buy right here, you can be more cautious and kind of scale in and see on lower time frame if you can catch, the confirmation move. All right, you can just take extra confirmation on this. Or, if you just want to commit on this accumulation, right? And if this accumulation fails, then you just want to go and take the sell afterwards. All right, that's one way that you can attack it. So we have CAD-JPY right here. The CAD-JPY is just overly bullish. We can see this. We have this huge move towards the upside, right? And even if I scale out, you can see the market has just been bullish towards the upside. All right, so we're just going to focus on this move right here. Another thing that we can include in this is momentum. That's another way to identify who's in control of the market. So let's look at this move towards the upside versus the move towards the downside, right? So in this move, we have just impulsive move. You can see the market was just fast. But as we're coming down, you can see the interest in the sellers are just slow, right? That's one thing that you can take from this. So momentum is something that you can use to identify who's in control of the market. When you see impulsive moves towards one side, that can tell you that that side is typically stronger. right? And then when you see the market going down or going towards the opposite side, you can see it's more choppy, it's more just messy, right? That tells you that that side is usually weaker. So once the other side, quote unquote, takes control again, right, which is the bullish side. So this is a perfect example. You can see once we hit whatever demand zone or whatever we're targeting, you can see, boom, impulsive move towards the upside. So, boom. Let's look at this, right? Let's look at this impulsive move. Now, as soon as we did this impulsive move, right, towards the upside, we have this distribution happening out of nowhere. Looks crazy, right? It looks very familiar than how like I was explaining it. We have this distribution, quote unquote, form out of nowhere. But one thing that you can notice is this. Look, these lows are maintaining, right? These lows are maintaining. So once we have this, boom, you would have bid off of this entry right here. Most people would have taken this entry, which you can see this entry ended up lasting. But in the long run, it didn't, right? In the long run, it didn't because this right here could not hold. First of all, there is nothing here to mitigate. Since this was choppy, everything has been mitigated already. So that means this was happening in the middle of nowhere. I always say this to my students. Do not trade in the middle of no man's land. This is the middle of no man's land. There's no reason to be taking a sell from here. Also, the market is bullish. Momentum is telling us the market is bullish. Even after this recent push, you can tell that the market is bullish. So there's no reason for the market to sell here. Look at this, guys. Accumulation. That shows buyer's interest. Accumulation again, right? To mitigate this accumulation. Then we have accumulation again to mitigate this accumulation. Now we have mitigated both of these accumulations. Now we have a reaccumulation. Okay. What do you think is going to happen again? Reaccumulation. What do you think is going to happen again? Reaccumulation. But let's look at this one, right? This reaccumulation is different. This reaccumulation is different. This is exactly what I showed you guys. This looks like a distribution. We have 1, 2, 3 drive move. We have a 1, 2, 3 drive move. All right. So essentially, you could see this as a distribution. Correct. But one thing that you have to be careful when you see this, understand who's in control of the market. Now, I will tell you, personally, me, I was actually trading this distribution. But I understood what I was doing here because I didn't take any loss on this, honestly, because I knew what to do. I knew what to do. There's different ways you can do this. So when you have this and you know you're on the opposite side of the market, when you know buyers are controlling the market, essentially this distribution could go in two ways. Either it could be a reaccumulation or it's just going to flat out be a distribution. So you can see that I have this 50% of the manipulation right here. So essentially what I was going to do here is I was going to trade from this distribution and buy from this reaccumulation. Honestly, that's one thing that I was thinking about doing. But the way I did this was I was only going to trade this distribution if I had a lower time frame entry. So you see I have this POY set here that I forgot to delete. The market did not give me anything inside of here, so I'm not taking a trade. Unless I seen a lower time frame confirmation entry inside of here, I wasn't going to take a trade from here. Same thing was right here. You can see that I had this little part zoned out. Since this right here was just a redistribution, I was going to take a sell from here. You see we had a reaction, but we didn't get that lower time frame confirmation that I wanted, so I didn't take any trade. Once this area invalidated, I knew most likely than not that the market was just going to continue higher. So now this is confirmed for me. You see that I've already had set my new area. Boom. All I had to do was measure out the 50% of this area, and you can see I marked it out already. And look where the market tapped into perfectly. Sorry about that. Look where the market tapped into perfectly. Right here. So essentially, I hope you guys are getting the idea of this. I hope this wasn't too confusing for you guys or whatever the case may be. If you still don't understand, supply and demand, accumulation, reaccumulation, and all of that, you have to join the Discord. This is very key to understanding what the markets are doing. All right. So I hope you guys like that video. Let me know what type of videos you guys want me to do. Let me know if you guys want me to keep doing informational videos like this, or videos where I cover, you know, trades and, you know, show you how we went about them, or things like that, right? So I'll see you guys in the next video. Peace out.